Hey, how are you?
Hello, hello.
Long time.
Has been.
I know.
It's been an eventful week in the markets anyway.
Not too shabby. Not
Yeah,
too
not too,
shabby.
yeah, just sitting back and enjoying it.
After I think the last 2 weeks, it kind
Mm,
of you're just like, I, I wonder, maybe I don't know as much as I thought I knew.
yeah.
Everyone must have been having those doubts. Everything's down. Maybe the economy is going to ruin it for everyone. I don't know, but
Yeah.
pleasantly surprised this week. Nice way to finish.
Yeah. I'm just quite skeptical by nature. So whenever anyone tells me this will be a catalyst, I'm like, always kind of just want to almost fade it, be like, yeah, I've heard of a million
Yeah,
catalysts before, and it's always, this is the
yeah,
big catalyst. But
yeah.
I was thinking, it doesn't really matter what we talk about this show because everyone would just be waiting for Brandon's show
Well,
this week.
no. You know what?
Yeah.
I wish. I just finished with Brandon, right? Okay.
Yeah.
And I've come back off this survival week thing, and we'll talk about that in a minute. I
Mm.
was kind of like not really with it, a bit away with the fairies a bit, and plus we're trying to do this like new format because people said, "Oh, I like the chat, but I like the uranium stuff," and other people are going, "I'm more interested in the uranium stuff. Can you stop the chat and do the chat somewhere else?" So I didn't really get to have a proper kind of conversation about what's going on, but we talked about obviously equities running, which is great.
Yeah.
Good news. What are the catalysts? you know, just like,
Can't you just timestamp the conversation to please both people? So
we
this is
did,
where, yeah,
we did, we did.
isn't that the ultimate? Like, if people just want to cut the chit
Yeah,
chat, this is where the actual chat
yeah,
starts. This is where the chit chat ends.
yeah.
Yeah,
We literally did. There's timestamps, but it's like,
can't please
no,
everyone.
no, we can't. And we're playing with
Yeah,
the data because it was 50-50 as well, so you can't just go, well, obviously 80% of people find you irritating, so just give me the uranium and move on.
yeah.
It was kind of 50-50 of, no, I just need the uranium stuff, but no one was using the timestamps.
Okay,
Makes it
great.
harder. So anyway, so we've done that, but yeah, no, he was obviously very pleased
Mm,
himself, and we talked a little bit about Spurt, maybe some of the other things which are moving things along, like in terms of Reddit joining the party, which is always good, but it also
yeah,
signals that it'll go mental and then drop off again when they get bored. So it's going to be
yeah.
the in-out crowd, as I call them. But that's fine. You still play
Mm,
that. You still play that. It depends what your investing strategy is. Like you can sort of play the Reddit crowd thing and then sell off and then come back in at a later point or something. Whatever tickles your fancy. I can't be asked, so
yeah.
place my bets and just sit back and got other things to do. So,
Well, that's what I was kind of worried about. Like when I was reading this, I was like, where does this kind of end if this just turns into kind of like a mini speculative mania? Whereas you've obviously got the fundamental longer term view, but it just gets absolutely silly. Like
yeah.
yeah, almost have to just kind of step away from it. But then then you're playing the game of timing to get back in. It's not the game really want to be in either.
No,
Mhm.
no.
Just move on to
Well,
coal.
I I am very, very firmly moving into
Yeah,
coal. We're seeing a lot of interest from oil and gas companies want to come on and talk to us as well. That's sort of interesting.
yeah.
Obviously,
God,
feel a bit more confident.
there's some trades there. That backwardation is so steep. Yeah, and coal's so cheap. It's just don't know where to put money at the moment. It's just like target rich environment was the joke. Mm,
Yeah, but like you say, at the end of the day, it's about who's going to give you the return that you want. I mean, I don't care whether I place it in. I don't care what I place it in. It's just like you give me 3-4 times my money, I'm in. Lovely.
yeah,
Well, got to be careful, haven't I? I'm sure there's
yeah.
some really even stuff that you wouldn't touch,
Mm.
Fergus.
I wouldn't touch.
I'm trying to think of what hideous investments are out there. You know, child labor camps. You know.
Jesus. Yeah, no, I wouldn't touch that.
There's child labor business in the country. Love it. The returns are astronomical.
Extreme vice investing. Yeah. I've got some interesting interviews for the next week or two. Yeah. Just got Tim Stamos with the African Lions Fund. So interviewing him. Yeah. Got
it's a good going.
Yeah. So that's just really interesting, like diversification. He's literally going and opening brokerages in like tiny little markets and just buying the blue chips there. And some of them are trading just 2-3 times earnings, teens dividend. The currencies aren't as bad as what everyone sort of the depreciation. And he's just doing that across all of Sub-Saharan Africa. And it's so that's
they're based out there, right? They know they're kind of in the. You can't sit in Vancouver and do that, right?
Yeah,
you don't sit in London and do that.
Yeah, it was a joke. It's almost like he's got the advantage with low frequency trading because he can read the paper and he still gets the news earlier. He rings up the broker and the broker actually sells him the share before the market's even. There's like the proper old days. Yeah. He said he's got alpha from just reading the paper and understanding what it will mean for the stock, which is just absurd. Yeah.
Well, that's, like you said, that's the way it used to be done, right?
Yeah. Yeah. And it's kind of, now we're kind of used to people trying to cut a millisecond off by straightening fiber optics to the polar opposite. Yeah. And then I've got Ladislas Maurice. I've already filmed that interview and that's really good. That's he's all across Eastern Europe. He's like kind of takes us for a run right through all the different yields you can expect across different places, what's most of their markets are doing. We kind of go through a lot of stock markets. So some of the stuff he's bought, like he just got some crazy ones like in Uzbekistan, kind of, for example, and some of the stocks in there, and all this stuff is just completely off people's radars. It's got no flows, no sort of financial leverage. It's just fascinating. Yeah. So, and then he also dives into sort of the offshore banking, citizenship, like second citizenship, storing gold. I love it. It's just found it fascinating.
All that stuff's getting a little bit harder.
Yeah, it is. Certainly if you're American.
Talk about the old days. Things used to run a little bit different. But yeah, that ship is really tightening up wherever you look. You know.
Yeah.
Yeah. Well, let's step away from that topic very quickly. So yeah, I mean, so how's your week been? I mean, you're obviously still on your own. You're going out surely soon there, aren't you?
I am. I'm off in next Wednesday, so less than a week. I am flying to Jakarta and then straight through to Istanbul and meeting Mia, who's arriving a few hours later than me in the airport there. So what we're currently planning is just over a week in Istanbul and then fly down to Cappadocia. 4 days there, exploring all the historic stuff, all the sort of underground, you call them tombs, and got a really nice hotel, sort of catacombs. That's it, not tombs.
Okay. Rubble watching underground. So cool.
Exactly.
Right. Very nice.
Yeah, and then from there, head on down to the coast, and then we're gonna rent a car and then just road trip all the way up around the coast for it's about 700 k's, I think, and gonna just try and get a rental company that'll let us pick it up in one place and drop it off in another right up the coast, and then just hotel hop along the coast and explore. That's what we've tried and get a nice convertible and do that. So that's the plan. Yeah.
Oh, that sounds beautiful. You've reminded me. I had my card. I've got a card which I used. I think I must use down in South France, and I restaurants, shopping, whatever. And I don't know where I was in some shop in Saint-Tropez, and said, car's been declined. I said, that is impossible. Usual thing.
Yeah.
Turns out some knobhead had cloned my card and gone on a road trip,
Yeah.
coastal road trip, and
Yeah.
they spent £14,000 on new tires for a car. I can see how you're funding this. New tires for a car, and where they go to like clothes shops. So to say, we're on a road trip. I'll just go and borrow someone's money.
Yeah, sorry, I should have told you this was me prepaying for my holiday. Yeah, I managed it.
Geez, put an invoice in, man. Fantastic. No, what a wonderful one. While you can, before kids come along.
Yeah, well, that's
complicated.
Yeah, just bounce around a bit. So yeah, we've kind of wanted to do that. Had the same idea of America, go across there and get a nice rental car and try and do one of the coasts, go down the East Coast maybe for 2 weeks a month.
Not on fire.
Exactly.
Right?
Yeah. Well, that's the thing with Turkey at the moment. Yeah. Hopefully, all the fires are pretty much out by now, from what I'm reading. So, not running that gauntlet.
Are they getting? Have you researched what's going on in Turkey? Obviously, the fires not brilliant. Greece and Turkey are not brilliant, but are they kind of dealing with any of this kind of Afghan kind of people leaving and sort of crossing borders and trotting up to Turkey and Greece like they normally do? Are you seeing it?
Yeah, I've seen a little bit on that. I don't know much about it. Just saw that they were saying that they're not going to take the brunt of it. It's going to have to be shared. But yeah, that's generally always the case, that sort of Europe tries to funnel them all down that way, and they try and run the gauntlet and get across Europe so that they first get like detained in one of the Western European countries, so that they kind of become a refugee there. And so that's kind of what happened with like Syria. Like they don't want to get caught in like Bulgaria or Romania. They don't want that to be there. They want to get into Germany or God, it's tough, isn't it? I saw I was watching there's this Jake Tepper. Do you know Jake Tepper? He sort of does these sort of documentary type things and stuff, but he's a sort of, it's like comedic bent to him, and he sort of was sort of dealing with, he did a lot during the sort of the last election in the US, going to MAGA rallies and so forth, and just sort of he's a real liberal, right, a real Democrat kind of guy, but trying to do it with humor. It's like, right, just putting simple questions to the MAGA audience, and he would catch them out on their beliefs, not knowing actually what they're talking about, sort of thing. That's his kind of shtick, right? He does that thing. Whatever you think of that, and I think it can be quite hilarious. It shows people just, and I'm not taking sides, Democrat, Republican here. I'm just going, people have such strong beliefs and views without necessarily understanding the premise on which they have those strong beliefs. It's kind of like investing, basically. I will defend my thinking to the death if necessary, but I can't actually explain to you why. So just the usual sort of moronic behavior of human beings all around the world. So that was his thing, but he did sort of one recently, which kind of tickled me a bit, where he was talking to, again, audiences, individuals or couples, and saying, well, what's going on in Afghanistan? Oh, it's awful, it's terrible, and Biden shouldn't have left or abandoned them, all those women and children, and the Taliban will come in and they're going to be harmed or killed, or it was just a really tragic position. And so Tepper goes, oh, so we should take them in here.
America should bring those people over here just to protect them from type. Oh no. I don't want to do that.
Yeah.
So it's like,
yeah.
oh, it's terrible. Biden's awful. Why could he? Those poor women and children. Oh, so we should have them as refugees. Oh no, definitely not. No, I wasn't saying that. And it's just like, so he kind of, but he does that with whoever. Right? In this case, it's Afghan, and next month it'll be something else. But I just thought it's that whole thing of not in my backyard. And I think, as you just said, the Europeans are like, oh please, no, we don't want to do that, but they're going to have to. You can't cause it or be part or party to a mess like that and then not take responsibility. So
well, the problem is like when I was living in Germany, it really sort of splits them down the middle of it was like Syrians at the time, obviously, should they accept them? How do they sort of integrate them into society? And then it's kind of like almost, it was like a failure there. Just they weren't learning German, they weren't giving them a real shot. And so it's such a touchy subject there, because now they kind of, it's been largely sort of a failure to sort of incorporate them in, and they just end up like kind of like what France has. It's almost like a separate little areas. Like the police don't want to go there, they don't kind of accept French law. It's
camps. It's a really tough one, actually. Kind of a real insight into humanity and society as a whole. And I am of the old school camp of, tell you what, come on over, but get indoctrinated. Basically assimilate to local customs, behaviors, law, everything else like that. Like, that's all cool, right? May not be what you're used to, but it's what we do here. So get aboard, or go somewhere else where you are more comfortable with your beliefs or whatever you want to do. Okay, and so that's a bit old school, but I think that's what you kind of gotta do. And I've seen that like in Paris, where you've kind of got these camps in Paris, and then obviously up at Calais, you've got, this is from 5-6 years ago, let's say Syrians, coming through, or just general. It's been going on for years. People trying to get to the UK because we've got, free education, free healthcare. We'll give you a home and we'll give you some money. It sounds like heaven, right?
Sweet deal. Yeah,
really sweet deal. And so they all want to come over here because the roads are paved with gold, as the old saying goes. And the French, and since we did the Brexit thing, the French are like, okay. We used to detain them here. They're yours. You can detain them on your side. So really sort of petty behavior. But that's what's happening now. We're getting boatloads of people crossing the channel, which is, by the way, quite a busy thoroughfare. And there have been deaths. People do die. But the French have just said, if you've got to come up through France and you want to go to the UK, there you go. We're not going to stop you. So that whole camp at Calais has just been, the French are saying, we're not spending another dime on it. And the UK saying, well, we'll give you money to have it on your side. No, we're okay. Yeah, but your side. It's like,
I hadn't heard that. Yeah, makes sense after Brexit. Yeah, God.
I think we used to pay something like 50 million pounds a year for the French to kind of deal with it at that side. Stop people like going up because we've got the Channel Tunnel, which is the train tunnel between France and England under the Channel. And they're like, crack on. There we go. Very good.
Cool.
Very good. Okay. What are we talking about this week, Ferg?
So this week it's kind of just a lead in, because this is what I've been asked the most, is about kind of diversification, asset protection, taxes. And so I thought, I'm not really the person to answer any of these questions, but thought we could have a chat, and then I'll try and seek out experts and go down all these different lanes. So this is my very average knowledge of each of these. We can bounce it around, and then I've obviously already organized quite a few people that have deep knowledge in this. So I've already got kind of like I mentioned before, I've already got Tim for kind of explain Africa diversification. I've already got Ladislas for discussing kind of sort of relocating taxes and foreign real estate, and hoping to dig someone out for asset protection. I haven't found, we were talking about sort of like wealth managers. And so that's kind of where I just wanted to have a really quick kind of run over and sort of just jot some of my ideas down. And then hopefully, if there's enough interest in some of these topics, we can kind of run with it from there and dive into it. So this is just a pretty broad overview and me finding a few charts that I think kind of make some of my points as normal. So I'll grab the screen.
We're going to talk about how you save money or make, we're not saying make money, but how you can save money here, aren't we?
Yeah, well, it's one of the few things that people don't really ever consider, is the fact that some of your best returns are obviously structuring your taxes in the right place.
Yeah,
and
absolutely.
It's like me. I made a lot of my money in Australia when I was working corporate world, but by the time I left there, I still remember I got my last bonus. It was 50 odd grand, and it was low 20s that I actually got in the account after it. And that's just the nature of Australia. They
Brutal.
50% tax, bit of Medicare, and then your compulsory super. So then they take 10 odd % for super. So it's obviously the top tax bracket, but you're seeing 40 cents on the dollar. And that just always stuck with me, as like, I don't know how I can really get ahead here. Like it's kind of like a car driving faster and faster. You got more wind resistance to slow you down. So, and do I really need to be here? Like, and so that was why I kind of restructured my life in a lot of ways from there.
And it's a big question to ask yourself. It's like, how much harder do you have to work for just a little bit of getting, like, it's a difficult conversation, because people will be earning different amounts of money. They'll have different amounts of wealth. They'll start from different positions, and therefore you'll have your view, your optics will be true because they're your optics. So people sitting whinging about paying tax when you're too much tax when you're earning $2 million a year. Not too many sympathetic voices, I suggest. So we're going to take this conversation in the context of what the average guy could possibly look at, or the series, what the average guy could possibly look at to just sort of tweak and maximize how much money stays in your account versus gets paid to whichever lovely government is just poking your eyes out at the time. Because I was having this conversation with my wife this morning about some money we've got somewhere, and she said, well, what are we left with? And I told her, and she was like, you got to be kidding me. I said, well, that's because that's the one place where we haven't actually had advice and sat down and thought about it, because we didn't, well, this is going to sound shit. We'd forgotten we had that money there. Right? It was like one of those things. It was such a long-term investment. It was kind of like back of mind somewhere around, and we haven't dealt with it. And we did, it's full of the chair moment this morning. So I think this is really good, and everyone should do this. And it's the kind of thing that it's usually the last thing that people look at, because it's too complicated. There are forms, there are conversations you got to have. It's too time, the time-consuming component of it, and what's it going to do for me anyway? But it really important, this one.
Really people don't want to talk about it. Like, it's kind of funny. It's like no one ever wants to talk about like salary or taxes, or it just doesn't get mentioned. Even people are still blown away when I mention New Zealand taxes. Like, it's people don't understand that we have no capital gains tax, which is like a big part of why how I've managed to get where I have, is the fact that I can live off capital and I don't essentially pay tax on it. And it's just it's New Zealand, and it's
do you have an inheritance tax?
I don't think New Zealand does at the moment. I think they're talking about it, but I don't believe they do. Yeah.
Australia doesn't.
No.
Well,
but Australia makes up for it with just crazy taxes on everything. Yeah. So, but yeah, and it often gets quite like a negative reaction when you do try and talk about it. Like there's people that think obviously taxes are your duty. Like I have, yeah, it's just a touchy subject. Some people think, yeah, you're using obviously the economy, so it's your duty to pay a high amount of taxes, especially as you're saying, the more you earn, the more you should be contributing, which is fair enough. But there's also like kind of in your best interest, as long as it's legal, to optimize your taxes. So I've always sort of fallen on that side, and if I can optimize it even more, then I'm going to. And lastly, what I'll get into is historically, sort of when you understand where a lot of Western sort of economies are going at the moment, we're probably going to see more and more taxes pop up. Like if you've studied history through times of sort of overspending, inflation, then the government has to continue to try and balance its books. But I'll get into that. I've got some interesting charts for that. Cool. So this is the first one, and I saw this was off your post as well, and percent like, how's everyone sort of feeling? Everyone feels there's going to be a big market correction. And this is something I think about a lot, is I would like to spread, like I'm far too concentrated at the moment. Probably 90% of my net worth is just in my brokerage accounts, which is probably not the smartest, but it's kind of where I see the most opportunity at the moment. But I would like to kind of diversify into kind of like what I discussed with Ladislas, like buy some various real estate, possibly across sort of Eastern Europe, where even Mia at the moment, she's showing me some of the yields that you can get in Montenegro. Sort of and they're not big outlay, sort of €50,000, like 1-bedroom apartments in the capital, and they're yielding sort of 7, 8, even 10%. So some of that's quite interesting. Yeah. And it's
interesting with property. It's a difficult one because there's so many hidden costs, unexpected costs that kind of hit you. We've got to stack a property, and which we've had for a long time. So, but I mean very little about. And so when you kind of sort of dig into the numbers and so forth, and it's those sort of unexpected and impairment costs, and it could be, I don't know, you need to replace a roof. You need to paint the bloody thing. So if it's single digit, problematic, because you'll end up sort of near 4, 5 is the reality, because stuff just comes along and is doing that you weren't expecting, you haven't factored in. So which is kind of where we kind of go for the more the kind of commercial side with a low double digits or the low teens, which you can get. We've got stuff in East Africa, which is some of our best performing stuff, right?
Ladislas and I discussed that. He's got apartments in Ivory Coast. Yeah. But yeah, not commercial. But yeah, the commercial he was discussing in Ukraine, in Kiev, that's high teens, and it's amazing. And so, but yeah, as you say, like it's even have it in New Zealand. Like some of the yields actually look good, and then you put in all the costs, and you barely even break even. Like by the time and everything. That's not to mention before what's kind of happened now. You can't evict people. They can just trash your place. They can, you can't get rid of them. They're essentially financialized. Yeah, all the above. And they're highly risk adverse to, right way to say it would be they're extreme long duration, and you can risk sort of government rent controls as well, which is something people often don't consider. So you've seen that in Germany already. They kind of put in rent controls, which is kind of fine. Everyone kind of ignores it at the moment because you're making your capital gains, but it's pretty serious if inflation starts ratcheting up and you get rent controlled. Then they're kind of making you suck up a loss.
Yeah. And plus, if it's international, you'll need someone to manage it for you.
Exactly.
I think I've said this one a couple of times on the show. It's like, my favorite sort of example of costs you weren't expecting. It's like the lodger says a light bulb has gone, to which your reply and my reply was, will change the bulb. He goes, I don't know how. And you have to send someone from the management team to do it, and they give you a £200 bill.
Yeah.
And on a, £2,000 a month rental, that sucks. On top of the 10% you're being charged by the management company and whatever damage that, the list just goes on. That's why I say the rentals to individuals is not my favorite.
And they just it was because what I got into in this start in Australia was there's just more and more compliance every year, just more and more costs get stacked on. Everything has to be if anything goes wrong, it's your fault. If you forget to upgrade this new warrant on the building, if you forget to do your check this for fireproofing, do this for it was just never ending. And it was just you almost need full-time compliance people, kind of like the same with the funds business now. There was a joke that back in the day you used to be sort of a few hours a month to do your compliance for a fund, and now you have 3 full-time people.
Anyway, property, I think real estate can be good. And I say we're talking about non-correlated investment here, I suspect. So it's definitely worth consideration. And if it's local, I've got a buddy of mine that lives near me. He's got 28 apartments in town. He's just bought them over the last, I think, 15 years or so. But they're 10-minute drive from him. So he's like, okay, I'll do that. So you got to work out what you're into, what you're capable of.
Yeah, well, that non-financialized is a huge part of this as well. So that's one of the big arguments Ladislas made, is that you want stuff that hasn't got excessive leverage in the system, and that's why you're seeing BlackRock go round and buy up whole sections of houses in America, and they're just turning it into a financial product. And so it's kind of you just like anything, you're adding a lot of leverage, and that never ends well. And so you want places where you don't have that sort of leveraged aspect, where they've still got quite a hefty cost of capital, maybe Eastern Europe and Africa and stuff.
Stuff. Maybe I'm looking forward to these conversations that you've got and you're about to record, because I'm a big fan. We haven't looked at Eastern Europe after our trip to Croatia. I'm kind of, that's not Eastern Europe, but you know what I mean. The property prices there are just ludicrously low.
Yeah,
and I think the returns seem quite good. But we know a bit more about Africa, because I say, some of the strangest places. You could be in the middle of crikey. I can think about at least 4 countries in Africa where the cost of rental in the capital cities were more than they are in London, because you've got this massive expat community. So you just need to, a few of those, and it's a good, nice, lovely little return.
Yeah. Well, that's the thing. Some of them get painted with a sort of risky, when really, as you say, it's the capitals are actually very international.
Yeah.
Anyway, so
property, there we go.
Yeah, property. So kind of covered that. Illiquid foreign equities. So this is what I'm digging into with Tim, and a lot of this is just kind of you're almost front running liquidity, because you're going to places where they only have a brokerage. You have to be there in person. You have to open it, and that's the only reason these companies aren't getting bid up. There's he's got banks and cement companies and stuff in Africa, in Uzbekistan, that are all trading like coal companies. They're all they're saying 2-3 times earnings, mid-teen dividends, and no, it's just too hard to get access to them. And so it's kind of a play on, you're gonna earn a nice little return just on the dividend alone. You've a lot of these countries are growing very quickly, and hopefully in the future you are going to get multiple expansion when they sort of do people start getting access to these markets. And but obviously with that you've got a few risks. The main ones usually currency and geopolitical. So you've got to understand. It's quite nice to go into some of these after they've had sort of a devaluation. You don't want to get cut to shreds before. So it's what's kind of Kazakhstan Kazakhstan was a good example. Heavy devaluation. So you wouldn't want to be in there before that. But then again, a lot of their markets are actually priced in USD as well. This is something I want to ask Tim about. So this is, I've got fascinated with this idea that you can they call them like long shorts. So it's the idea that a business actually stands to benefit from a lot of volatility. And so a simple idea here is like exchanges. So in a crisis, you actually have more transactions, more volume, and they actually do well out the back of it. They actually make more revenues. Most of them have a monopoly. So like an example in Africa is Nairobi Exchange. Like no one can compete with it. It's actually I think it's got, yeah, I'll dig into it with Tim anyway. I think he's invested in it and written a bit about it. But they're just fascinating businesses. There's on Jesse Felder's podcast, there's a guy from Horizon Kinetics, James Davos, and he digs into them as well and thinks they're one of the better ways you can play inflation, because they're what he calls asset light, and yet they're kind of, if you get huge increase in volume, which you will with sort of inflation, high commodity prices, even if things are negative around the world, that causes people to trade more, try and sell more. They've got fixed costs, and they just benefit by just higher and higher earnings. So it's quite an interesting way to kind of get diversification, as this kind of business that almost welcomes things going wrong in the world, which I kind of found fascinating. Stored physical gold. So I talked to Ladislas about this. So this is the idea of a few, like this isn't buying obviously GLD or anything, which they don't actually have the physical gold. This is more buying gold and storing it, what the costs are, how many basis points, and also jurisdictions where you don't really risk it being confiscated. So this is the idea of like storing it in vaults in Switzerland and Singapore are two of the more popular.
So we're
Commodities.
seeing a company, we're going to be able to do this on an app. So it's kind of cool. They do something with Sprott, but they've got this product of their own, which basically they're saying 24/7, 365, you can buy gold with them stored. You can work out where you want it stored. And I'm not quite sure. I'll have to understand how the pricing and the cost of it, but they're gonna come on next week and talk about that, because a lot of people are talking about buying physical at the moment. Well, so they always do, but a lot of people who wouldn't even expect to be talking about buying physical are talking about it, and I think I just want to understand it a little bit more, because we're not sitting on any.
Yeah, it's an interesting concept. Some of the vaults, even as you say, allow that, and allow, like, they make it almost like a bank account. Like they allow you to sort of run essentially like a loan or a debit card against your gold deposit as such, which is kind of interesting. So you've kind of swapped out the banking system for sort of a physical amount of gold in which you use to you can kind of have a sort of a running loan against it, which is interesting.
Yeah, I think these guys are saying you can deposit money with them, and then go buy that way, or you can just do it on a case by case basis. Then you do a trade on the day. So yeah, I'm so intrigued to see. I mean, their USP, the thing they seem to bang on a lot was, you can do this at the weekend.
Yeah.
Right. When everyone else is not working, because it's on an app, you can do this 24/7, 365. And that was their thing. I can't imagine anything else about it is different, but you may have a moment on a Saturday night. You've had a couple of beers, you think, I need more gold now. I can't wait till Monday. In which case,
yeah,
that's these guys. Solve that one problem.
And doing it on the blockchain, like it's sort of having it actually backed by gold, which is makes a lot of sense. Kind of, it's taking out all the risks in the system of actually, like, do you actually own it, or is it are you going to get kind of cleaned out by someone in the middle going bankrupt and having a claim on it? Which is what, yeah.
Can they do that? I mean, okay, I know so little. That's why I want to speak to. I know nothing about it. I mean, they can't like leverage the physical gold. They can't sell it more than once, right? Is that the thing?
Oh, they do that all the time. That's like the whole gold market. There's the paper versus physicals, like massively leveraged. Yeah.
Oh man.
So that's the whole thing of if you're happily sitting there with your. There was a great interview with Anthony Deedon, and he tried to call on GLD to deliver him some of the gold because he owned a large amount of stock, and they just they'd kind of advertise that they would, but they refused to do it for him. And that's when he kind of realized it's just a financial product. They've got no actual, they won't. They haven't got the gold.
Same, right? So they leverage like the banks do. So the question is, how leveraged? 10 times, 20 times. I mean, what? Jeez,
I don't know the answer to that, but yeah, this is the problem. Yeah, everything's kind of
I know I'm getting old. I just want. I literally want things to go back to kind of where it used to be, which was like money in, money out. That's how rich you are. What's left? Yeah. And now these kind of these highly leveraged products, which I'm sure I'm a beneficiary of in multiple places, but it's just when you sort of see something where you say, I'm buying physical gold. Well, are you? Are you now?
Yeah, exactly. Do you actually have any claim to it? Yeah, this is the problem when it kind of can go poof on you. Yeah. I'm going to get someone on that's a gold expert, and he's going to explain it well. Yeah.
Brilliant. That'd be really cool, because it's like the physical people who kind of store physical gold under their bed or wherever in their own property. Maybe they are the smart ones.
Yeah.
Maybe they are the smart ones. You know what I mean? Because it sounds a bit kind of gold buggy to have, bars and ingots of gold in your house, but maybe if you're a believer and I need physical gold, then get physical gold, because then you got to have where this falls over. No.
You got to have guns and the ability to you go down that hole.
I know, but that's what I mean. Well, that's what sounds a bit, it can sound a bit kind of crazy. You're saying you're storing your guns, gold, and God brigade, but it just can sound a bit nutty, but the reality is it's probably eminently sensible if that's where you think this is all going. I mean, I don't.
I can't. Let's not go down that path. Yeah. Well, it was a joke. It's GMB. It can stand for gold and Bitcoin or guns and bunkers. It's only a slightly removed before a lot of people talking about the former are actually talking about the latter.
Man. Hey, that'd be so cool. So I had a guy on talking about crypto recently, like sort of crypto and sort of blockchain, and really interesting guy, professor. He actually really fascinating background to him. But I interviewed him a couple of weeks ago. Well, definitely worth listening to. It was this the first conversation in the kind of Bitcoin, crypto, digital currency, blockchain conversation. Yeah. So there's a lot of buzzwords thrown in there, which I know a little bit about, but not enough to be confident in. So you're going to get a few more people like him on board. But you're right. Maybe we need someone who does bunker designs. That's what we need.
The guns and bunker. Yeah.
I'll do that.
Yeah.
I'll do that.
Yeah.
Let's do it. Right. Sorry, I'm interrupting you. Commodities.
Yeah. Well, commodities, I think we've beaten to death on across the whole channel. This is just, what we talk about most days. Like, between energy in general and metals and whatnot. Thought I'd add Bitcoin because Bitcoin is kind of interesting in that it is largely outside the system, and it's shown itself to like whatever you have to say about the volatility, you have to kind of respect that it's never been hacked and it's probably going to stick around. And so for a non sort of correlated asset to everything, you can't knock it.
It's kind of, I was reading an article this morning on Bitcoin, basically making your own Bitcoin. People are making them every day of the week, right? And I was reading this guy, and he made a coin called Idiot Coin. And just as kind of, because we're talking about Doge was done as a joke, and now it's 25 billion. And then he kind of very long, I'll put a link up to it, actually. I'll send you the link, put in your piece. And he kind of goes through how easy it is. So you can, anywhere between $8 and $300, you can set up your own Bitcoin, your own, the digital currency. Call it what you like, and then you basically just get a bunch of people to pump it and market it, and then eventually it'll be worth a lot more than this guy. I think he just did it. So I think he created he put $300 in, and his Bitcoins were worth $7 each. And he said, right, let's play this game. And he went through the process of setting it up, getting it marketed and stuff. And he basically had to unwind it at the end because he didn't want anyone to lose any money. Yeah, it's just a social experiment. But we could do a Crux coin.
I actually joked about on Twitter, and someone set up a coin for it. Yeah, it was like great a full coin, and they're like, created, here's the link to it. And I was like, oh god, I don't want to, I'm not even gonna, I'll just pretend I didn't see that. I don't want anyone buying that or starting a market with that.
Right. So I'm throwing us wildly off tracks. Anyway, real diversification. I'm running it down actually.
Then jump onto asset protection. This isn't my specialty by any means. I really know bugger all about it, other than you don't want stuff in your own name. Ideally, you have a trust that has your holding companies, and then they hold it. There's just layers between you and your assets in case you get sued, or just keeping some separation between everything. So this is where I'd like to get like a wealth manager that can explain this a lot better. My understanding is pretty minimal.
Mm-hmm. Well, the wealth managers vary, believe me. They know what they know, right? And so as that thing of, if you sell nails, a hammer is the answer, right? So it's everything. So yeah, you've got to really shop around, I'd say. But we'll get a few people that you can talk to. You can throw them your way and see if you find anything useful from them.
Yeah, the problem with this as well is it's also individual. Like something might work for someone in Australia, New Zealand, and not work for Americans, and then it's different again in Europe. So it's kind of hard to do anything very generalized, I guess. But yeah, I think there could be an interesting chat in that anyway. So tax is the big bad wolf. So this is always just like how I kind of think about them, is just it's kind of getting in the way of your compounding. So if there's if you can optimize, people forget just how big a kind of result it has over time. And so this is obviously just tax 25%, which is on the low end if you're in Australia or something. So it's if you can, like most people sort of, which what I'll get onto later in this sort of idea of relocating, but can arguably be like the best sort of investment decision you ever make is relocating from like Australia to New Zealand, capital gains free, if you've got a significant portfolio, or going further abroad and choosing places like Singapore, for example, very low taxes. I think their maximum income tax is under 20%. They've no capital gains tax and no tax on foreign earned income. So you got a few places like that around the world that you can consider, and it really does make, as this is kind of illustrating, an absolute monster of a difference. But then, obviously the counter to this is most people are paying high taxes because they love the country they're in, which is also very understandable.
Do they?
Yeah, or did until maybe a year or two ago.
Look, I'm trapped. I don't love the country I'm in, but I'm decided to pay the taxes. And again, I think it's story I talked before. It's like I've got a mate of mine who made a lot of money when he's sort of in his late 20s, and he says, "F this, I'm off to Monaco."
Yeah,
tax free. So off he schlepped, him and his 3 kids and wife. And no, he didn't have 3 kids back then. I think he only had 1 kid back then, but he's 3 now. And he lasted 5 years. He said, "Fuck this." So So,
love it.
but he did say that. He did say that. He said, no, bored out of my mind. And he came to us, and he actually contacted HMRC and said, I want to do a deal. And he did a deal. So not as much as they would on paper have him pay, but reasonably, I mean, he got a big chunk off the bill.
Yeah.
He said, I'm staying abroad, or if you let me come back more than the 90 days a year, we can come to some sort of arrangement and I'll pay you something, and that'll be full and final. And that's what he did. But so he did love the country, or missed the country immensely, having initially decided to leave. And I mean, well done him, because I tell you what, since those days, stealth tax here is such a big problem for us. We're getting it from every direction.
Yeah, well, that's kind of the point I'm making here, as well as in this particular slide, is inflation is a tax, but not only that, but inflation drives taxes. So this chart kind of shows it quite well. So the analogy that's been drawn quite a few times is that we're kind of in a period like the 1940s, where obviously on the back end of the war, there was high debts to be paid, and inflation was the way to chop them down. And so that's where you see the sort of the blues, the inflation rate. So not only did you have sort of inflation going up into the teens, which everyone kind of knows of, but you also had the tax rate chasing it. And so that dark line is tax. So this is obviously US, but that's the corporate tax rate. And so not only would you have started the 40s at next to no corporate tax, you would have been at what's that? You would have been at sort of a 50% tax rate by the sort of the late 50s, at the same time as you would have been having inflation in the teens. And this is kind of it just pays to understand this, because this is likely what will happen in a lot of Western countries again, is they've got far too much debt. They've overspent, and they're going to need to finance it all. Inflation's going to jack up their cost of debt servicing, so they need to get more revenue. And the obvious way is to raise taxes. They're going to start going after all the low-hanging fruit. And so it's just to understand that if you don't like taxes at the moment, it's probably not going to get any better, and it's highly likely to get a lot worse over the coming years, if you kind of agree with my whole inflation outlook. And just government irresponsibility in sort of developed countries. Yeah, and they are literally piled on top of each other. So like a sort of a 15%, or I don't think we'll get that high, but sort of say a 10% inflation rate is essentially a tax on top of your tax that you're paying to the government. So it's pretty nasty and pretty hard to stay out ahead of that, which is why kind of inflation can be so destructive over time to people's wealth. Yeah, so this one always gets a sort of a reaction. Most people don't even want to consider. Obviously, they've a million reasons to say where they are, between family, friends, their job can't relocate. But it's just to always have it in the back of your mind that it is always an option, whether it's sort of doable for you and your family. It's there is always the option to go where you're kind of treated best in the world. And if you like, it's kind of the choice I've made. I always thought I'd end up on the beach somewhere in Australia, and now I've kind of made the decision me that probably be here longer term. I'm talking about sort of buying land and building a house here, because I really don't like the way Australia is kind of going, and I don't see myself ending up there with the sort of direction everything's been going there for the last few years. And the other stay ahead of the curve is pretty much what I was explaining before, is as we kind of seen more like there's a great I should have put it in here. There's a great chart showing that in America, the percentage that the government's financing of GDP just keeps going up and up and up. So I think it was like 2 years ago, before COVID started, it was below 20%. Now it's like 25, 26%. So it's they're just printing more money themselves, so they're devaluing the currency, and it's not creating anything productive in the economy. So like anything, that's gonna come home to roost in the future, and they're gonna have to find more revenues to patch that hole. And so this is obviously unpopular to mention a lot of the time, but I guess if there is enough demand, I could kind of mention some considerations I had when moving to Bali. Like obviously living cost is very low. You get beautiful villas here for quite cheap. You run through all that side of things.
Yeah, but that's, yeah, you kind of, because when I think people are talking about it in the club, it's like, you kind of get attached from, with family, friends, job, like you say, sometimes people can do that remotely, sometimes can't. They would need to like change of job would be a big thing. But so these are big decisions.
Huge. Yeah.
And not to mention most countries are, I mean, unusual situation in the sense that most of the kind of first world nations, if we're allowed to use that phrase these days, the European countries, or Australia's, or Hong Kong's, or US, they're all doing the same thing. They're all printing money. They're all in the same boat. So moving from one to the other of those, interchange between those first nations is pointless, it seems.
Yeah,
because it's just all heading towards the same rocks, as it were. But going and living a sort of expat life, which I kind of grew up in, I quite enjoyed it. It's kind of intimidating to a lot of people, it seems, right? And new country, new language, obviously new setup. Can you work remotely? Can you earn? Is the income, is the standard of living better, that much better for the inconvenience? It's big questions people worry about.
Yeah. Well, it's also the I think a lot of people have got a taste of working remotely with quarantines. So something that could have been absolutely unthinkable has now sort of, they have had a taste of it. And there's also, like what you're talking about with your friend, there is the idea that you can have sort of a wealth creation period if you do adopt to go to a lower tax jurisdiction for a while, knowing full well that you'll go back and obviously do without the higher taxes for a period that you are creating, that you think will be more profitable. Like a kind of an example now was with the whole commodity play, maybe go somewhere for with lower taxes for that duration before returning. But yeah, as I say, it's easy to say, hard to do. Like it's easy for me just to sort of talk about it here while I'm in Bali, but I understand how sort of unique my situation is. No kids, obviously, and sort of been able to work online. And I also obviously did the hard yards in Australia anyway to set this up. Societal trends, so this is just again going on that sort of whole tax and inflation sort of narrative, is to sort of understand that a lot of the sort of promises made by Western governments are unlikely to be met. Like we're already seeing kind of America, anyone that can do any basic maths understands that their pension and sort of Medicare system is in serious trouble. It's like far more needs to come out of it than was ever put into it, and all their pensions are all far behind the sort of returns they need to make it work. And so the most likely sort of assumption is that everyone's going to have to take a haircut on their pensions in the future. And if they don't, it will be because they printed money to sort of patch the holes, and so you'll get your nominal amount, but it won't mean a lot. Your won't matter if you still get your same sort of pension payment if like a Big Mac's like $50 or something. It's they get you the other way, because it's there's a guy forgetting his name is Luke Roman, and he's got a service forest for the trees, and he's got this interesting sort of analogy that he draws with America, that last time they got caught with obviously the cost of the war, and he's kind of comparing sort of high, or actually it's Germany with Weimar, with sort of war reparation payments, and what America's got with its high sort of Social Security, Medicare and Medicaid. Like it can't print that money because those are all medical services that it needs to pay. So it's actually got to come up with those services in the future. And so it's the same thing, that they just have to try and print, but those services are going to get more and more expensive and cause more and more strife. And the others are just it's just the understanding that a lot of the reasons I hear people say to stay in a lot of developed countries, I don't think they're as valid as they were maybe 20 years ago, sort of like having a safe 9-to-5 job or safe professions. Like a lot of my friends that have tried to go with safe professions have obviously been fired over the last year or two when they were trying to take the safe route.
Yeah, and you know, yet again, politicians doing the work for us there. Like I just look back to Brexit. I mean, the amount of jobs that have been lost, well, certainly in the financial sector, obviously, which was 12% of our GDP. You know, it was significant. So we just dumb decision-making affect your ability to have that safe 9-to-5 or job for, do people have job for life anymore? I can't.
No, not really.
Think of anyone I know who's had in the same job. One, British American Tobacco.
Okay. Company that's doing extraordinarily well. So yeah,
yeah, from university, and he retired last year, and he's 50. That's it. But you're right. It's just maybe the societal trend component is interesting. I wonder if we've got much shorter windows and shorter decision-making periods. Maybe changes has happened quickly in the past, but we're just not aware of it. But it feels like there's always something hugely disruptive to our lives in much shorter timeframes these days.
Yeah, well, it's also kind of seen it with I've seen it in New Zealand and Australia. Was the job when I was at university, everyone wanted to be a banker, and so of course I was coming out of university sort of early 2000s, and that was before obviously the GFC, and so a lot of my friends that were the smarter in high school and university all went into banking, and it's turned out to be a terrible career. Like most of them aren't doing nearly what they thought they'd be. The bonuses kind of evaporated, and they're having a really tough time. The same kind of went for lawyers in Australia. Like that was seen as, and even geologists, like it was that was seen as one of the sort of the better high paying sort of professions. And like anything, just supply and demand, they got oversupplied. So it's one of my kind of views at the moment, is I kind of see software companies almost being sort of commoditized, because everyone that I talk to now wants to be sort of a coder or a developer, and just sort of the China and the India, and like just pumping them out. And so it makes sense that all these large margins that a lot of tech companies are experiencing are just going to get competed away, because people are just there's just going to be this wave of coders and developers that will drive down the price of these things. And unless they've kind of got like network effects or some way to defend their margin, like this great piece by Lyle Taylor, who I'm trying to get on as well for a chat, and he just talks about Webjet, and he talks about Webjet takes about 10% of the value of a ticket. And he said, he just asked a question like, what is the actual like when you consider like the cost of flying the plane, like fuel, the pilot, the actual capital cost of the plane, everything. What's like the real cost of Webjet? And he says probably under 1%. So it's a bit of software that books a ticket. And he said like that will probably mean revert to its actual value, which means their margins are going to get crushed by 90% over the next decade. And I think that's actually quite an interesting way to kind of look across the whole space.
Well, maybe that's the conversation. That's a great conversation, because I think we're starting to look a bit more at technology. It took us a while to kind of work out how we and where and why, because it's such a big diversified. Most tech companies don't survive 3 years, right? They're 2 years, because they just don't work. So you've got these huge swathes of coders, programmers, utter dumb business model ideas, but getting funded to huge degrees, and we struggle to see why. But the amount of noise that makes it difficult for investing just to work out where to put your money. So it's a truly kind of fascinating thought around the types of jobs that are out there, and what you can do. And obviously, back to your previous point, coding, you can do that anywhere in the world. We've got 4 programmers at the moment doing stuff for us. They're in 3 different countries. It's great.
Yeah, well, there's even something that's it's kind of, I forgot the name of it. I think it's not MP3, MP something, and it's essentially they're doing away with the need for coding. Like it's just a sort of an ability to type in what you want to code, and it kind of generates it for you. And so it's this idea that they're gonna kind of take coding from its own language to just plain English, whatever you want, kind of like a Wix. Instead of having to code up like a web page, you just use like Wix, and it's just like drag and drop. It just makes it far more user friendly, and that kind of it's just kind of progress, I guess, in this space. Anyway, sorry, that was a go off down that rabbit hole.
It's an interesting space. Anyway, more of this. So today's about setting up some topics that we can deep dive into, and people shout out and say which ones they want to talk about first, or want to learn about first.
Just say what you're more interested in, and I'll go down those avenues. These 2 charts were just, that one on the left is the same as what I was pointing out with the US. So this is Australia, and that's the inflation rate and Australian corporate tax. So people just love to extrapolate, and so most people can't see the tax rate going higher. But there you have it. Back in the late 80s, with higher inflation, it was up around 50%, the corporate tax rate, and obviously with low rates, it's bottomed out for this period. And so a lot of what we've come to think is normal is actually is just a sort of a result of low rates. And then on the right this is like my sort of alligator jaws again. I've always kind of watched this with interest. So this is Australian household debt to GDP versus wage growth. And so this should track together. So if otherwise your mortgage or your rent is becoming a higher and higher, well, not your rent, just your mortgage with this for household debt, it's becoming a higher and higher percentage of your income. And that's with obviously Australian property prices going up. The problem here is wage growth isn't keeping up, and is obviously, if anything, dipping down, which is most interesting. What happened is the gap was starting to close, and this is where like Aussie property was starting to look a little bit shaky, and then they sort of opened all the floodgates again. The sort of bank said the onus is now on the borrower, not the lender, to verify the income for loans. And you're just seeing it with Australia. Like I think it's just they're just really propping up the property market, even though the underlying fundamentals aren't particularly supportive of it. So I'm not very constructive.
No, I think it's dumb. It's like we had that in the late 80s and 90s here, where it went from, okay, you have 2.5 times your earnings, your monthly, right? So basically, your the mortgage the house price would be like 2.5 times your salary, right? So
Yeah.
say you're on second math, 50 grand a year, you could have your £125,000 mortgage, right? Plus whatever deposit you put down. And back then you didn't even need to do that. And then it got to 6 times was the highest one I saw. 5 times was a kind of common average. 5 times your salary was the house price. That, and then the mortgages rates when they started doing that were quite low, but they crept up into low teens by the time this whole thing just crashed on its ears. I mean, so it's a much smaller market here, and I was going to pay attention to the UK housing market. But imagine being allowed, because you're too dumb to know otherwise, 5 times your salary for the price. So on 50 grand, you can buy a 250 grand house, which you then have to pay a mortgage on, which you can't afford because it's more than 50% of your well, it's going to probably more than 50% of your take home salary each month. And then when the interest rates go up, because you haven't fixed them, because you think it's going to be golden, people were losing their houses left, right, and centre. I remember that period; it was so awful.
Yeah, I think you're going to see something similar play out in Australia. People forget that Australian banks get the majority of their funding off the international market, and so all that has to happen is you have to have non-performing loans in the banking system go up. They hike the rates that they lend to them, and then starts off like a negative feedback loop. And that's you're just seeing way too much leverage. I've seen like charts with I think it's Melbourne and Sydney where they the surveys were that was a percentage of people's income that was going to sort of servicing their mortgage was like mid to high 30s, like 30, 35 to 40%. And this is, you obviously get crushed if rates start rising, and you'd worked it out perfectly so that you could afford your expensive house at exactly this fixed monthly, and you'd even talked up your income a bit. I know when I was just playing around with it when I was in Australia, because I was thinking of doing a renovation. They said my income wasn't enough. I think I was seeing if I could get a $500,000 loan, and I just said, I've got a share portfolio that'll makes me 20 grand a year in dividends, and he just said okay and just signed off on it. And so I think there's an awful lot of that, and I feel like it's probably get some Australians on that have actually gone through the process. I'd be interested to sort of because this is a good 5 years ago since I was there, so maybe it's changed, maybe it's got crazier. Probably
I don't think people should be allowed to. I think the institutions need to be more responsible. That's not good enough to say it's the onus is on the borrower. It's like, no, the onus is on the lender to ensure you're not creating a huge bubble, a real big problem here. And I think Australia is winding itself up for a big moment like this. I certainly read an article, I think it was the Australian Financial Review about a month ago on the topic. I think people are getting a little bit nervous about house repossession rates.
Yeah, they're the worst position to take higher rates, essentially. If rates really start running higher, then they're in serious trouble. I think that was this is just I take responsibility. It was an ideal thing, but it's just a lot of the better choices are the hard choices. And so I've always loved this quote, is that when I was even leaving my job, like a lot of people just said, you're an absolute idiot. Like it's just stick with like the kind of the easy career path, keep earning, keep getting your yearly pay rise, keep getting your bonus. You'll know exactly where you'll be. And it's always the hard choices that make the biggest difference. And so with sort of taking responsibility for where you are sort of 10 years out, you can either choose kind of the easy path to get to it, or you can kind of do something a bit more difficult and really reap the rewards further down the line. And that's the choice I made. Because it is interesting with a lot of my friends are really unhappy back in New Zealand with, like, especially the friends I'm talking about in banking. They're really unhappy with where they've ended up. They're in Auckland, where they selected the highest paying job, where they thought they'd be making solid sort of six figures. They've barely got there. The property market's gone absolutely berserk on them. They can't afford to get into the property market. If they do, they're straight back to the problem we're talking about, where it's literally like at least a third of their income is going straight to, before they're even trying to pay back principal. So they're very leveraged and very kind of exposed, and they're not really where they want to be. And they obviously, but then they're not going to do anything. They're just going to keep making easy choices on a daily basis, and it's going to be their life. And I always think about this.
Well, I think that's right. I mean, that's a great quote there, and what I'm about to say is probably wrapped up in there. But it's also about trying to decide what's important in your life, right? So you've got to either reset your expectations, which may sound like a bit of a negative thing to do, or be more realistic about what's going to make you happy.
Yes.
If you're striving, so I was on this survival week thing this week, which was hilarious, and we were in this 8,000 acre estate, which is owned by some billionaire dude, and he, and you see the sort of people, flopping around that, so not quite living in the real world, and the big flash cars, because you rent various properties around this thing, right?
Yep.
And which we did, and all these kind of big flash cars and people coming by helicopters and all those sorts of things. And you go, well, that's not the real world. And even we're like, what the hell is wrong with people here? Because it was like, they seem to be more intent on impressing people looking at them than looking out and thinking, well, what's making them happy? Because it seemed to be a lot of stuff on there for show, rather than enjoying the environment. We were there for, there's a beautiful part of the world, swimming and shooting and archery and doing some sort of unusual fun stuff because the kids haven't done it, and going for walks in nature reserves and all that sort of kind of good healthy stuff. There was a kind of massive, I really felt uncomfortable being around it, actually.
Yeah.
So it was a great holiday, but I wouldn't rush back into that environment again, because they weren't there for anything other than showing off, and the amount of money it cost them to do that, to be kind of compete. And I just found that kind of a little bit of a strange one, but it kind of makes you perhaps realize that you've got to put yourself in a position where you're going to be happy with what you've got, and not always upset that you haven't got X, Y, or Z flash car or big house, or you're not spending whatever some flash holiday or whatever, because those people aren't real. That's just not the way the real world operates. And I think you've got to, I don't know, change your mindset. And it's like that guy I interviewed a while. That guy talks about, if you're so smart, why aren't you happy? It's like a question. It's just like, you've got the answers. Just go and do it. You don't need me to tell you to do it. You've already got the answers. Either work out what's right for you. What will make you happy. Stop worrying about what everyone else thinks about you. That's a better place to be mentally, I think. Just don't worry about people looking at you. You worry about, are you happy with what you see?
There's this great blog post by I'll put a link up to it. It's by Derek Sivers, and it's this, he like follows that Charlie Munger's sort of line of thinking of you always invert. So he goes like, what essentially makes people the most unhappy, and then he just makes a list of what people do that essentially leads them to be unhappy. And like the one that sticks with me is like always chase the comparison moment. And so your I don't know, your 2020 BMW M5 isn't enough. You need the 2021. You won't be happy until you get it. And then you get it, you're happy for 10 minutes, and now it's just a car again. Now you have to chase the next comparison moment. And it's just, that always stuck with me, that's just, you just got to get completely away from that. Like it's all the sort of happinesses and like kind of progressing with meaningful stuff. Like I get a lot of joy out of like Brazilian jiu-jitsu at the moment, just like slowly getting better with that. And that, like, yeah, most of my biggest joys are like stuff that doesn't actually cost anything, like Brazilian jiu-jitsu, surfing, just walking the dog on the beach. Yeah. It's funny, and that's what Bali's quite good for, is there isn't any comparison moments, because got quite a low glass ceiling. Like most people can afford all the restaurants here because it's all quite cheap. No one's got cars, so there's no sort of showing off your cars. Everyone just drives a scooter. Most scooters are like $1,000, so like everyone can afford a scooter. There's no fancy clothes or anything. It's too hot for that. So most people are just cruising around in shorts and t-shirt. So it's quite nice that kind of removes a lot of that side of it. Yeah. But
we definitely did that. So I was kind of dressed for the countryside, and everyone else was dressed like they were walking down Savile Road. It was hilarious. I think
three-piece suits. And
one person thought I worked there. You know,
I love that.
Show full fleece on and just looking like a tramp, but I was warm. But our favorite bit, we were talking about this in the car on the way back, and so the favorite bits, and I think my favorite bit was catching frogs with my youngest one, who likes a bit of nature, and doing our own barbecue. That was it. Out of all the fancy meals and all the fancy places, that was my big takeaway. And same with the little fella. You know, his was basically rowing on the lake. You know, it's just like, there you go, done. Yeah. Loved it, because he got close to the birds, and could go exploring. So it's the silly little things, right? And that's what people forget about, and you kind of busy yourself being upset that you haven't got, let's say, the latest, whatever the hell the latest thing is that you think you need. And I just, so I think sometimes just getting away from it all, and resetting and rethinking, it's kind of important. I know it's all relative, everything's relative, but things. Stop spending, as my eldest son says to me, you don't need to spend money to be happy. I'm like, you're absolutely right. And I was very pleased that he said that.
I couldn't agree more. And I think it's just that a lot of people end up working a lot harder to enjoy stuff that they doesn't really change anything. Like it's kind of like doing that extra overtime in the office so that you can fly sort of business class or stuff like that. That it doesn't. It's such a such a irrelevant. Like I've often thought, I'd like to kind of, my ultimate goal is just to have a heap of time for my kids. Like when have kids in the next few years, is that I want to sort of be barely working when give them the most valuable thing, which is just lots and lots of time. So that's kind of what I'm aspiring to. I don't really don't want to be flat out working the whole time when they're there.
There you go. You got it. You got it long before I did. I was late to the party for the thinking, but I think I'm there now. But everyone's different. Everyone's going to have different views. And I think people are sort of quite good at sharing, how they're coming at it. But I'm trying to be a better version of me, trying to be more thoughtful, spend more time with the kids, not worry about buying things that I thought I always needed. But I'm trying, and I think everyone just, if you can improve a little bit, then it all helps. So I've got a dash because I've got some hot news. Someone's just texted me and said they found the biggest gold find of their careers. I know. Okay. I can tell you. It's I think Meridian. We've had them on before. Young Gilbert. Is that right? Meridian. I'll just look it up. Yeah. There you go. I think when we've had them on a couple of times, I did say last time around, it was one that perhaps people should think about. And hopefully they've gone and proved me right, but I'm going to find out in about 3 minutes.
Fantastic. All right.
Have a good one. Good weekend lined up? Good weekend?
No, I've got a friend's barbecue and drinks at his place. So that's about the only event really. Other than that, just trying to organize the last few things before we go. But yeah, everyone from this, I'm interested what people want me to dig into the most. I'm kind of interested because kind of covered very briefly quite a few points. So it'd be interesting where everyone's curiosity is. Yeah.
Okay, so there you go, everyone. Write in, contact Ferg. Let's go down those. So I'm intrigued by some of those things. A few things I think I haven't looked at for a while, for sure. And we can all talk about them. We'll get a few kind of wealth managers on as well, and perhaps people that can look at some more esoteric diversification options for you along the way. All worth thinking about while you're sitting back and counting your uranium dollars.
Yeah.